Hello and welcome to another Small Gold live stream. Today is Wednesday, the 20th of March 2019. And welcome Small Gold mug stackers and game changers. This is this guy, Small Gold, your host this evening. And tonight's episode is entitled Russia Makes Another Mega Gold Purchase in February. We're going to discuss that, as well as a few other topics that are bumbling around in the news. We're going to take a look at the gold and silver prices. We've got a few crypto stories we've got to cover. Got some information on the Mueller investigation. We've got a few bits of Moronica that'll give you quite a chuckle, or maybe you won't laugh, but some Moronica. We got some updates on Brexit, China. So let's get to it, and we'll eventually get to this big Russian gold purchase in February and determine what it actually means. So the markets today were mixed, but it was an interesting day because the Fed gave its announcement on the direction of interest rates, and they gave some pretty forward guidance, pretty far-looking forward guidance. They didn't just say, like they have been saying, well, we're not sure, we're going to wait and see, we're going to take a look, we're data dependent. They basically said no interest rates this year, no interest rate hikes this year, and maybe we do one in 2020. Now, that's a big difference from 6 months ago when they were counting how many they were going to do in 2019. And you would have thought that that would have driven the markets higher, but the Dow Jones was down 141 points, and it was up on the announcement. So when the announcement was made, the stock prices, they rose. They made a significant rise from about 25,725 all the way up to about 25,915, and then they puddled along for an hour or so, but then going into the close they fell pretty hard. And so the Dow Jones closed 141 points down. It's not down a big deal, but what should have thought it would have been an up day. It was down 0.55%. NASDAQ did eke out a minimal gain. It was essentially flat on the day. It closed at 77.28, but it had reached as high as 77.79 or so. So it was up pretty high, and it fell too. Same with the S&P 500. It had been up earlier in the day. They all went up, and they followed exactly the same trail downwards towards the end of the day. The U.S. dollar index, as expected, did fall, and it makes sense that it fell, and it fell on the announcement that the Fed was not going to be raising rates and with their dovish guidance. But similarly, as the stock markets rose on the announcement and the dollar fell on the announcement, and then the stock markets fell later in the day, well, the dollar index rose later in the day. The dollar index had been down as low as about 95.79 and rose to about 95.94 by the end of the day. Now, it had been hovering around 96.40 most of the day, and then fell on the announcement that the Fed was in this dovish mode and giving fairly substantial forward guidance. Now, gold and silver reacted as we should expect them to react when the Fed gets dovish, and I think it was a little over dovish, meaning that I don't think they were expecting the Fed to explain how long they weren't going to raise rates for, and they said, maybe we'll do one in 2020, which it's actually pretty smart on their behalf because it shows that they're not panicking, they're not trying to say we need to do a rate cut yet. They're still trying to pretend like everything is moving ahead. We just don't need to raise rates right now. And actually, if they don't raise rates right now and the economy manages to chug along at a 2%, it's a big if, but if it does, then they might be able to sneak in one more rate hike. And, if that happens, they might even be able to get one more in 2000. So if there's no recession in the next year, they might be able to get interest rates to 3%. Maybe not as much as they want to act against a recession, but you never know. In 2020, if a Republican Congress comes in, maybe they do another rate, not a rate cut, but another tax cut. And remember, tax cuts have an immediate impact on the economy, whereas rate movements, monetary policy has a delayed effect. So one of the reasons they were able to raise rates in the last 2 years is because of the tax cuts, which do provide a type of fiscal stimulus as opposed to a monetary stimulus, which allowed the Fed to be a bit tighter over the last 2 years. And now that the fiscal stimulus has probably worked its way through the system, the bang you're going to get for that buck is probably gone. But if they did another one in 2020, that might give the Fed the ability to raise rates again. We'll just have to wait and see on that. Now, let's look at the gold price. You can see here the gold price shot up on the announcement, was trading just around $1,300 before the announcement, went all the way up to about $1,316, almost $1,317, and it drifted lower by the end of the day, but it finished with a half a percentage gain, up about $6 to $1,312. Currently, it's up a little bit. It's up to $1,314, and silver had a similar trajectory today as well. Up a little bit more than gold on a percentage basis, but not much. It went up 10 cents to $15.45, up 0.65%, and right now it's up a little bit as well to $15.47. Platinum was the big winner again today, up to $8.63. It's up again in after hours. Palladium flatted, but palladium is still the leader amongst precious metals, at least in the physical form, $15.78. Well, rhodium too. Rhodium is at $30.60, which is technically the leader in that as well. Now, what happens to the gold-silver ratio? Well, it's still above 80 to 1. It's at last close at 84.94. So it drifted down a little bit as silver had a bit of a better day. Not much better day, but a slightly better day than gold. And again, you like to see that when gold rises in a substantial manner or an aggressive manner. You usually like to see silver do something a little step above what gold does. So that's what we saw today. Other gold and silver news. Let's take a look. Other than the big Russian news that we're going to get to. Let me see here. India says that silver demand hit 4-year high on cash payout to farmers. So when the farmers get extra money, they say that they turn those rupees into gold or silver. And they're thinking that gold is a little too expensive right now, and that the Indians might give or store some silver. Not sure that's exactly how that works. The Indian silver imports have been rising. If you look at the numbers, it's not on domestic purchases. It's more on industry. And there is silverware and jewelry, but it's not on investment. Now, Indians do buy jewelry and silverware, and I guess when you buy that, it is somewhat of an investment, but it's not used as, it generally remains more of a family heirloom than gets passed down for generations than something that they might try to trade in if the price rises. It's not like they're buying the bars that you see here in the pictures, and then when the price hits 20, they're going to dump them. It's more like they have the money, they have extra money, they will buy silverware, they'll buy jewelry. And of course, industry is smart, and they buy silver in advance, store it when it's at a lower price. I think that's it on the gold and silver. Let's move over to the crypto space. We had a bit of a surge in the late afternoon. Bitcoin got back over 4,000. It's currently trading up 1% to $4,000 and $4,030. Ethereum is at 138.87. That's up 1%. Litecoin up 2% to $60.25. Bcash down a little bit to 157.41. We got a bunch of crypto stories, some interesting stories. Let's go through those right now and see what they say. Avnet accepts crypto. This is a big Fortune 500 company. They now accept payments via, I think it's BitPay. Yep, BitPay is a pretty big payment processor. So you're seeing a lot of companies adding the crypto payment option. It only makes sense. You know, if you're a merchant and you see that there's $80 billion worth of Bitcoin out there, and they might want to spend some of that money, meaning the $80 billion worth of Bitcoin, some are hodlers, yes, some are locked into investment funds, but for the most part, that cryptocurrency, that $80 billion, is available to spend. And one might think that if you're a merchant, all things considered equal, it doesn't cost you anything to set up a BitPay account, really. And you don't pay the merchant fees, the Visa fees, the bank fees. You just pay the processing fee. Or if you accept it directly, you pay next to no fee. And then it makes sense to do it. Not because you're going to make a fortune. It's just it's incremental revenue that you might not otherwise get. Now, Binance, which is the largest cryptocurrency exchange, announced that they now have a system where you can buy Bitcoin with cash at over 1,300 stores. So in addition to the 4,400+ Bitcoin ETFs and now the thousands of Coinstar kiosks that allow you to buy Bitcoin, you're seeing these other arrangements where a company like Binance has set up a platform that lets users buy Bitcoin with cash from 1,300 news agents in Australia. We saw how in France now thousands of tobacco shops on the corner also have a similar arrangement where people can buy crypto. This is part of the more massive adoption that I see taking place. It's taking place slowly. A lot of people say, well, you can't buy it everywhere. I think it's just something that creeps upon people. You used to never see a Bitcoin ETF. I believe everyone right now in the United States can easily travel no less than 10-20 miles to find a Bitcoin ETF. Maybe there's parts of the country you can't do that, but every major population center has them all about. Other things going on, Bakkt and ErisX. They are both big companies involved in crypto storage, crypto trading, crypto adoption for use in commerce. That's more what Bakkt is doing. ErisX is more of just a trading platform at the moment, storage. But Bakkt appears to be, as part of their mission, that's why they have Starbucks involved with them, along with Microsoft, New York Stock Exchange, is to get the cryptocurrency flowing through commerce, and that's why they're working with Starbucks. Yet to launch, though. Fidelity's launched its program. That is a trading platform. They also offer storage. Here's another story from CCN on the Binance enables cash for Bitcoin buying at 1,300 stores, or these types of kiosks here, where you can use cash and turn that into Bitcoin. There's another one from ErisX. They're talking about, and this is a good point here, the institutionalization of the crypto market is going to take some time. Be patient, they say. And that's a very important point. I think a lot of people, I think in general, in life, people expect these big bang, one-time event things to happen like 9/11, or usually the big changes in the world, yes, they do occasionally happen from one-time events, but most major changes happen incrementally and gradually, and I'm not quite sure. I think that's what's happening with the cryptocurrencies. The fact that people are focused on maybe what look like the big bang with the cryptos rising from $1,200 to $20,000 and back to $3,000, that's some kind of defining event. It's actually just something that happened along the road towards the gradual increase in the use of Bitcoin, the number of wallets, the number of exchanges, the number of transactions, and so on. That's what's really happening. The price going up and down, that's been happening for 10 years. And I think people have lost sight of that. They think because it came down, well, it's over. That's not what's happening. Despite the fact that the price went up and down, the continued adoption occurs. More ATMs, more trading, more futures platforms, more merchant acceptance. Now, again, it's not at levels where it's ubiquitous, but it's certainly, and even the fact that it's on Google and Yahoo and they covered in the finance news, all of those things indicate that it has gradually become part of the financial system partially, and part of just what people even know about. I mean, 10 years ago, you didn't even know what it was. 5 years ago, it would have been unheard of that the conversations we're talking about the prices that we have on these crypto assets right now. The fact that Bitcoin is worth $80 billion now is still a very, very big deal. Now, there was another story. let me pull it up for you here. On CoinMarketCap, which just used to be, for those in the know that used to follow cryptocurrencies, a place where you could check the prices. Well, now CoinMarketCap crypto indices launch on NASDAQ, Bloomberg, and Reuters. Again, it's this type of incrementalism where now it's part of the Bloomberg, NASDAQ, and Reuters information system, the prices that you're going to get from a CoinMarketCap, which is, you know, some type of startup. Then we saw, let's see, some other news here today. Let me just pull it up. Yeah, there's that one. I'm going to pull him up, be able to, okay. The guy named Gabor Gorbax, he is running the lead on trying to get the Bitcoin ETF from VanEck approved by the SEC. Now, he wrote an article that makes a very good point, similar to what I'm making. He says Bitcoin is not going away. It's a blog post on the VanEck website, A Year of Singles. Very good looking, very good way of presenting it. You know how I talk about there's not just a big bang. Well, I guess he's saying there's not just one big home run grand slam that happens. He's saying crypto Bitcoin not going away. Now, this isn't some Bitcoin pumper. In fact, he's a regular banking guy. He's an ETF guy. He's not a change the world and all that kind of thing type of Bitcoin pumper. And he's just a, I don't want to say he's a run-of-the-mill guy. I mean, he's probably quite talented, but he's a product manager for a ETF, a financial institution person. He's not a, you know, Bitcoin evangelist in that sense. But he points out that he says the singles that have happened are, for example, and we've talked about this, when Square and Bitcoin integration. Now, Square is about as mainstream as you get. It's one of the most popular apps that people use to buy and they just use their phone to transact business. And Bitcoin is now on there, and they're selling almost $200 million a year worth of Bitcoin on there. Not a huge deal, but it's something that didn't exist a while back, and he calls that a single. He talks about states accepting Bitcoin tax payments. We've talked about that here. Ohio accepts Bitcoin as payment. Other states, including New Hampshire, Indiana, and Wyoming, are exploring similar bills. Samsung releasing its phone that has the digital assets key storage. Robinhood expands reach with Bitcoin license. It's another one of these Bitcoin licenses in New York. Expansion of the futures market. We mentioned, I was just talking about this as well. The CME group, the CBOE group, both launched Bitcoin futures. NASDAQ, with its market surveillance expertise, has brought that to the crypto exchanges he mentions. There is a crypto basket index, ETP, that was listed in the Swiss. We don't have an ETF in the US, but on the Swiss stock exchange, there's one of those. So he mentions all these little things that are going on. I can mention more. The Bitcoin ATMs incrementally increasing, the Lightning Network increasing. There's a number of things that are just happening, and they're incremental. And I think at some point, this stuff will be ubiquitous. A lot of people are just angry about it. I don't understand why. I mean, that's just the modern world. Anyway, what else do we have in the crypto stories for today? And you know, by listening to this channel every night, I cover this stuff every day. And so you part of hearing about it, and a lot of this stuff doesn't surprise many of you. Now, there's another thing. There's a bank out there, and the name of the bank is Silvergate Bank. And they have a unique business in that they cater towards companies and investors that probably have been shunned by other banks, and they added 59 clients, and they have right now about $1.5 billion in the bank. And so, you know, that's a hefty amount. It's not a large amount compared to JP Morgan Chase or Bank of America, but still, it indicates that it's a bank that is catering towards that business. And there's one out in, I think Litecoin Foundation is involved in another bank. So this is all part of the institutionalization of cryptocurrencies into the banking system. You know, once you have access to a bank, you have access to the SWIFT system, you have access to all types of financial services, and eventually there'll be ETFs and trading platforms for institutions, storage they already have. All this stuff is happening irrespective of the price. And again, I'm an analyst. I'm not here to predict pricing. I don't do that. I don't recommend you go out and buy anything. I know a lot of people like to hear that on the channels. And generally, frankly, most of the channels that tell you to buy stuff, they're like almost 100% wrong. Buy this, buy that. You got to do this, you got to do that. And I know, people just love to hear predictions. And they feel like that the person behind the microphone has their best interest. And maybe they don't. Maybe they're getting paid to promote a particular ICO, getting paid to promote some type of mining stock, to have some CEO from some company come on their channel, and you think they're good guys and they're going to help you out. Well, I don't know about that. I think once you're used to digesting information and understanding where it comes from and not taking into a what a lot of people do is they say to themselves, well, so-and-so said this. So what? You know, if Einstein told you 2 + 2 is 5, you shouldn't believe him just because he's Einstein. You have to say, I think that's moronic. And yes, even Einstein said stupid stuff. In fact, there's a famous story about Einstein. He was playing I think he was playing a string quartet piece. I don't know, maybe it was Beethoven or something. And he was playing with his fellows, and he kept screwing up. And finally, someone said to him, what's the matter? You can't count? And he said, well, Einstein can't count. Well, in that instance, he couldn't count. So when you hear a lot of people always say, I saw the other day in the comments, who's this guy? I'd rather listen to, and they start listing people they think they're authorities, that these people know. They don't know. And even if they do know, it's not, they know because they're able to explain something that makes sense, not because of their name and because people know who they are, that somehow, that is all I need to know. So-and-so said something, and that is all I need to know. You have to listen to the content of what they're saying. All right. Shouldn't be lecturing you either. Okay, now let's go on. That's the bank there. Any other crypto stories of interest? Oh, there's stories here in Forbes. Now again, Litecoin is listed. They're talking about Litecoin in Forbes. You say, what's the big deal? 4 years ago, you wouldn't even think. Why would anyone even talk about Litecoin? Well, they're talking about why Litecoin prices have doubled this year. It's this creeping incrementalism of all this crypto stuff into the general population consciousness that's happening. And the other thing that's interesting is the Bitcoin bashers. I say it's here today. I see a lot of Bitcoin bashers have been silent over the past 2 months. They were yelling and screaming and scam and Ponzi the whole time when the price was really high. And then when the price falls, I guess they figure their work is done. Bitcoin's finished. And so they don't say anything anymore. So it's interesting that they get really annoyed when the price goes higher and they complain. And now they think that they've crushed it and it's over. And, you know, I think the price moves up a little bit more, they'll be back out trying to warn you and so on. And again, that's just doesn't mean anything. Now, the Fed. Let's take a quick look at what happened at the Fed. Zero Hedge always does a nice little thing here. Fed to taper balance sheet roll-off sees halting in September. Fed signals no rate hike this year with one increase in 2020. Now, that should be off to the races. Now, it could be tomorrow we might see some follow-through on the gold and silver. That does happen sometimes where you expect the prices to go higher and they either don't or they stagnate. Maybe tomorrow we'll see some follow-through. I don't know. Let's see what else we had on the Fed. Hold the line. Here's Chairman Powell. Holds the line. Says no more rate hikes ahead. Investors did not expect the FOMC to change interest rates at the March meeting. Yes, no, they did not expect the rate hike today. But I don't think they expected Jerome Powell to say that they're not going to raise rates till next year. But that's exactly what happened. All right, what else do we have? China. We always got to talk about China once in a while. Now, I've been on China for about 4 years, explain all these gold pumpers talking about gold back yuan and game changer and China to crush the dollar. Not real. And the rationale behind that story is United States just borrows money and China makes stuff, which is about as simplistic as you can get, because China makes stuff based on how much money they can borrow, and they borrow more money than anyone on the planet. And now it's coming to a realization that record high in corporate defaults is worsening China's debt problem. Now, again, this is something I think even in the gold pumper community, they finally have thrown in the towel and have faced reality. They understand now that China is a massive debt Ponzi scheme. It's not this golden paradise where everyone is smart. Well, some people still think this. They're smart, and they wake up in the morning and they think, how much gold can I buy? Because they're smart and they understand gold, and they read Sun Tzu, and Westerners are dumb and they don't understand gold. And that's a pretty tired argument. Chinese understand, just like everybody else, paper money. They invented it. They understand debt, credit creation, and that's how that economy works. Not that the West doesn't have credit problems. The whole world has credit problems. But there was this very simple narrative: West bad, East good, China good. China buys gold. They are smart. China to crush the dollar, the BRICS, and all this stuff. By the way, we saw it yesterday with the BRICS. That's another nonsense argument, that the BRICS are somehow this unified entity. They're going to crush the dollar. You saw Tropical Trump, Bolsonaro, yesterday with Trump talking about perhaps joining NATO. And South Africa is not any type of, that's one of the BRICS, big buddies with India, and India is not big buddies with China. It's just a Goldman Sachs acronym. But again, if you want to make up a story and say how they're going to crush the dollar and it's going to be game over and a game changer and dollar collapse and gold silver ratio 1-to-1, there's just so much of this stuff out there that people believe, and they believe it because it's not just one guy saying it. They get all their other buddies to say it. They all say the same thing. And then someone like me says, no, I'm not sure that's really true. Then they're like, who's this guy? Who's this guy? He doesn't know what he's talking about. And then 90% of the people that listen to that stuff think, yeah, who is this guy? And, but I am grateful that every now and then a few people listen and they say, wait a minute, that guy is right. You guys are just making up a bunch of nonsense and touting it and repeating it over and over again. And it's interesting is you only have to look at the reality of it. People have been telling you to buy silver for 10 years. And you never ever wonder why it hasn't gone up. It's manipulation. It's JP Morgan is going to... JP Morgan, that's the other story. JP Morgan's bought all this silver. No evidence whatsoever they bought any of it, but that's a fact to them. You know, they bought it and it should be 1-to-1, and they don't look at historic... They don't look at anything. They look at what they want to tell you, and then no one else challenges them, and that's what you get. And then what happens is I guess you get the Stockholm syndrome. You just end up believing them to your own detriment. You continue to listen to them and hope that maybe you haven't been hoodwinked. There's an old expression. I think it's easier to convince somebody. It's easier to trick somebody than to convince somebody that they've been tricked. And I think that's a lot of what's going on. All right, that's China. Let's move on. Brexit. This is a real disaster here. So Brexit's supposed to happen on March 29th. That was the deal. Supposed to have a deal by then. If you don't have a deal, you're gone. And this woman here, we will be gone on March 29th. Full stop, full stop, full stop. She kept saying all that stuff. We will be leaving the EU on March 29th. Full stop. Yeah, well, now it's coming up on March 29th, and she's like, well, how about we have an extension? And the EU says, yeah, okay, we'll give you an extension, till June, as long as you agree to sign the deal, get your guys to sign the deal we gave you last time, which they rejected. So I think, I'm sorry, but this woman has to go down in history as the biggest failure, because she never should have taken the job. They should never have given her the position. After the Brexit, what's his name? The guy Cameron, I think that's his name. Anyway, the guy who was the prime minister of England or UK at the time wanted to stay. And because the Brexit vote went against him, he did the right thing, he resigned. But then they put this woman in here, and she always wanted to stay. You don't put somebody in who wants to stay to be in charge of the terms of you leaving. I mean, it's obvious what happened is she was never going to leave or work to get Britain out. And the way she tried to get them out keeps them in and didn't make anyone happy except the EU, because they'd rather keep England in the European Union. Anyway, we'll see what happens. But now she wants a 1,000-day delay. Now, the interesting thing is, there's a couple of points here, is that's not enough time to do another referendum. What would be the point of doing another referendum? And it's probably not enough time. All it is kicking the can down the road. They should just take their lumps and get on with it. But I don't know what's going to happen there. Let's see what else. This was an interesting thing that I did see this on TV. This guy Meadows, he is a congressman, and they're saying all the same normal things that they always say about the Mueller investigation, that how the FBI, the DOJ, Strzok, Page, Comey, the whole cast of characters, they're all working against Trump. But I never heard this one before. He said there were also U.S. ambassadors that conspired with the DOJ to take down Trump. Now, I don't know what power the ambassadors would have. Now, the reason he's saying this, he's not making this up. These guys, these congressmen, have held closed-door hearings, just like they have with Page, Strzok. So they must have had some type of subpoenas or some type of interviews with people that he learned this. I'm sure he's just not making it up. And that may explain, remember when we had the issue where they said that there were certain presidents, certain people, someone had written an op-ed, I think it was the New York Times or Washington Post, that there were people at the in the administration that were part of the resistance, and could have been some of these ambassadors. Who knows that he's talking about? But it sounds like the cat is out of the bag. I mean, they have now released 4 of these transcripts with Strzok, Page, McCain's buddy or guy who worked for him, Bruce Orr. They're getting this stuff out there, and once the Mueller report comes out, I think what's going to happen is the Mueller report will have a set of facts and an interpretation of those facts, and then the White House, which Trump has everything, they will have put together a counter-analysis of what Mueller has, and then also they'll probably release more facts. So that's where Mueller's in a bind here, because if these other facts were not available and not known, and that Mueller somehow had the only information, he could release a report that would be hard to refute, because he could cherry pick his information. He can put whatever spin he wants on the information, but it's going to be hard to do since all this information has been FISA warrants, all the different interviews they have. It's going to be difficult for him to actually put together a document that is as damning as he may wish it to have been. All right, I think now, is that it for Mark Meadows? Yes. But I think now it's time for some people's favorite part of the program. Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent.
This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
I don't know where to start. I got 3 good ones here. Maybe we start. There's nothing about Bernie here. Maybe we just have to ask Bernie.
That's a good thing when I'm not in the news. Because sometimes it's not a good thing for people to be hearing from me. Like the last time you heard from me, I banged my head in the shower.
That was a shame, wasn't it?
And then the last time I was here, I believe I read from Beto O'Rourke's poem. Buff my balls. Wax my ass.
All right, stop. Okay, now, this one comes from us from New York City. Now, I'm a fan of the concept of the broken window theory. And any of you who follow economics, it's been around for, well, there's 2. There's the broken window fallacy, and then there's 2 broken window fallacies. I'll give you a quick background on them. The broken window fallacy is one that was discussed by Henry Hazlitt. And so a kid breaks a window, and they say, well, it's not that bad because now someone's going to get to fix the window. You're creating economic opportunity. Now, you don't have to be that bright to realize that's moronic, but that is Keynesian, or not Keynesian, but that's kind of this government mentality that you can make work and it's good for the economy. Because if breaking windows was a good idea because it created economic activity, you might as well just bomb all the cities and rebuild them. But I guess that's what the Green New Deal is. You got to knock down all the buildings to build them back up again. But the problem with that fallacy, and that's why I call it a fallacy, is the guy who has the store, this guy, he did not want to spend the money on building the window, a new window. The old window was perfectly fine. So the money he might have spent otherwise, an example that Hazlitt gives, is that the store owner might have purchased a new suit with the money that he had to now spend on the broken window. That means now the tailor doesn't get that money. And you could see how it all flows from there. Then if the tailor makes money, his apprentice seamstress or tailor would make more money, and then that person could buy stuff. So it's just a reallocation of capital that wouldn't have happened but for the vandalism. So it's not a good thing. So it's a good thing that he broke the window. The more windows he breaks, the more money the people can make, so that the 1% don't get to keep it all. No, that's not how it works. Okay, that's the broken window fallacy. But there's another concept as part of policing, and it came out of New York City. They had done some studies that if you live in an environment with broken windows and urination on the street and all kinds of nasty stuff, little things that aren't big crimes, but they're quality of life. Graffiti. When you walk into an area and you see there's graffiti, you realize, in a sense, maybe no one cares. There's lawlessness. You got broken windows. So what they started to do in New York City was, in the 80s, all the broken windows, like in Harlem, they would wallpaper over them so they looked at least like they weren't broken windows. If there was graffiti, they started to immediately remove it. And if by immediately removing it, you reduce the artist who's got his tag up, their desire to keep doing it, so they stopped doing it. And then by also arresting people for minor infractions, you create this more lawful, less lawless society. And then you find out a lot of the people that maybe you arrest for urinating in the street, maybe that guy was the guy that was going to commit a crime later in the day. When you arrest him, you find out he does indeed have a criminal record. So by focusing on all these little things like broken windows and making sure they're fixed right away and cleaning up the graffiti right away and arresting people for these minor infractions, the quality of life and the amount of crime goes down. Now you say to yourself, why are you taking cops and wasting their time arresting people when there's murders and rapes and robberies going on for doing all this little stuff? Well, it's actually because it overall it creates a safer environment, and it also, you often catch the criminals, the ones that are doing the minor infractions are oftentimes the ones that have also committed the major infractions. Anyway, so I'm not a fan of the police using their resources on things that look like you got bigger and better things to do. But in this case, this one is moronic because this is not what happened in this case. It's a case where someone was doing something, someone had done a little tiny bit of graffiti, and they decided it was going to stop. And here's what happened in New York City. Some guy had written #LoveTrump. That's all he wrote. He didn't make some big mural or anything, and that's all he wrote. And he put it above where you go into the subway a couple of times, and people complained. I guess they were triggered that how dare someone do this. It wasn't they were upset that there was graffiti. They were upset at the message. It was like they were offended by it. So the New York City Crime Stalkers decided they were going to do something about it. So they built a wall to catch this pro-Donald Trump graffiti vandal. And then they gave a press release of how they caught him. So they built this mock wall at the subway, and they hid behind it. And then when the guy came around and wrote "Love Trump," they were able to arrest him. Now this, in a sense, is moronic because they weren't really trying to stop graffiti. They wanted to stop this particular type of graffiti. The problem with this, though, is I can bet you, if the news will cover it, I'm sure. You really can't see here, but you could see it. It "Love Trump." It's very small. It'd take you 2 seconds to write it. Given the simplicity of writing #LoveTrump, I would expect to see a lot more of it throughout the city. I mean, how many walls are they going to build to try to catch people who are going to write it? It only is going to take half a dozen people with a Sharpie. You can just see how easily it can be done. People scribbling this all over the place. Just even one person, copycat person, doing it. I don't know. I think it's a good idea to crack down on graffiti, but that's not what they were doing here. They were cracking down on this graffiti because they found it so offensive that they had to put resources on it. So in this case, I think that's actually a waste of resources. But we'll see if the Streisand effect turns out and have actually created too much attention for themselves. Okay, now this next one is really moronic. This guy, I don't know what he's thinking. Somehow he managed to get an ATM machine out of a building in broad daylight. And there he is, and you would think, must have been a spur-of-the-moment idea that, oh, look, the ATM can come off the, it's not bolted to the ground, maybe I'll just take it. And he gets it out into the street, and I guess he has no plan. And so he figures, well, I'll just take a bus. I'll just get on the bus. And he's struggling with this thing, and look at him here. And this is as moronic as you can get. And then he gets to the bus, and the door closes. The bus driver won't let him in. Oh, that is futility and stupidity, and that really takes the moronic prize of the day. We got one more, but this is, I don't even see, I mean, you can use the broken window fallacy and the graffiti fallacy and say what the cops did in New York wasn't moronic. You can make an argument. I don't know how you can make an argument that this is anything but moronic. Trying to get that thing into a bus. Like, no one's going to see him. No one knows what he's doing. Unbelievable. Okay. But this one is moronic. This is a politician. And no, politicians often like to make arguments like, no one needs an AK-47 to go hunting. Or no one, they like to use the argument that no one needs this, is almost like it's self-evident and they've got all the answers. But here's Kirsten Gillibrand. Okay, A+ for trying to come up with a way to end the opioid epidemic. Now, the problem with the opioids are people take them, they get addicted, and then they can't get any more, and then they take fentanyl, and they die. I understand it's a horrible thing. And one of the ways they're trying to attack it is maybe you don't prescribe the opioids, maybe you prescribe other types of painkillers. I mean, it's a complex problem once it's reached the level of the number of people that get addicted, the number of people that die from the addiction. It is an issue. But that doesn't mean you just throw out a solution and because you're a politician, you somehow know the answers. So, Kirsten Gillibrand, this woman's running for president. If we want to end the opioid epidemic, we must work to address the root causes of abuse. Okay, there's nothing wrong with that sentence. That's a common way of attacking a problem. You attack its root cause. I don't falter for saying that. That's why, now here's where she gets moronic. Senator Cory Gardner, I don't even know who this guy is. And she's introduced legislation to limit opioid prescriptions for acute pain to 7 days. Why 7? Why not 6? But here's the rationale. Because no one needs a month's supply for a wisdom tooth extraction. All right. But what if you had your leg amputated? I mean, this is the stupidest thing I ever heard of. This no one needs is supposed to appeal to people like, isn't she smart? Isn't she common sense? 7 days should be more than enough for your wisdom tooth. Possibly. That's quite possibly. And possibly you don't even need it for 7 days for a wisdom tooth. You may not even need opioid for, you might use some type of topical pain relief. But she's bragging that no one needs a month's supply for a wisdom tooth extraction. That is the logical rationale for why her bill says 7 days. And I have to think that is moronic. All right, let's get into Russia. Russia's been buying gold. Russia is the third biggest gold producer in the world, and they pretty much buy all of their gold and put it on their nation's central bank. You can see here, Russian gold reserves have risen from 1,281 tons from June 2015 all the way to 2,152 tons as of February 2019. And look where that puts them in the tables. They are now a major gold holding nation, at least as far as central banks go. They are ahead of the People's Bank of China. A lot of people get all. There's another one that it's unfortunate that the pumpers have drilled this point into people's heads. There's 2 points they drill in their heads all the time. China is lying. They have more gold than 1,874 tons. Sun Tzu says, appear to be weak when you are strong. No, these are not the country's gold numbers. These are the central bank numbers. And I make a note, it's not on here on my website, that these numbers are the amount of gold that each central bank of each country holds. Not all the gold in China. India has far more in its country than 607 tons. But no one made a narrative, India is lying, and start naming Siddhartha or some other famous Indian person to make them sound smart. Sun Tzu. So the People's Bank of China has 1,874 tons on its balance sheet. Sure, there's plenty of other gold in China. They import more gold. It's reported from Hong Kong. They mine a lot of gold, 450 tons a year, far more. Anyway, but the central bank of Russia has moved up the league tables there, and at this pace, they should pass France and Italy in the next couple of years. If you look, United States, the other one is United States has no gold. It's all been sold. Fort Knox. Nonsense. Remember, Russia's gold hoard, 2,152 tons, is only worth $90 billion. So for the United States, if it was so important to have 8,133 tons of gold, and they somehow didn't have it, you don't think they could? Oh, they go and they steal it. That's why they invade countries. That's the other one. They go and they steal the gold. That's all the United States wants to do. But somehow that's contradictory, because if the United States can invade any country and steal their gold, and they can print money, which they always constantly tell you the United States just prints money, why wouldn't they have 8,133 tons of gold? It's the easiest thing to have. 8,000 tons of gold is what? $300 billion? It's not that much money. It's like a month and a half or 2 months worth of QE. They could get the gold if they wanted it, and who says they don't have it? And then you hear stories about rehypothecation and stolen in the middle of the night, and you have Jim Rickers doing some gold member. Well, I don't know what they were doing, but they make up these stories and people believe them to the point where, like, I have more gold than the USS. Oh. And they believe them so much they can get snarky about it. And that China's lying, and because they've heard everyone that pumps gold say that China's got 20,000 tons of gold, and there's a half truth in that. Yeah, there's probably 20,000 tons of gold in China. I reported on that. I've done charts showing if you add up the gold imports, you add up the gold that they've mined, you get to a number around 20,000. But it doesn't mean that China's lying when the People's Bank of China says this is what they have on their balance sheet. Just like India's not lying, the Reserve Bank of India, that's what they have. They don't have all the gold that everyone in China has, every entity in China, every bank in China has on the balance sheet of the People's Bank of China. Anyway, Russia, though, has 2,152 tons, and the big story today is they added another 1 million ounces, which is 31 plus tons of gold. But that's not the first time that Russia has added 1 million ounces of gold. They have done it. Count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times since June 2014. It is not uncommon for Russia to add 31 tons of gold to reserve. Russia is far and away the largest buyer of gold of any central bank. The second largest now for the last 3 months is the People's Bank of China. They add about 10 tons a month. Russia's adding 3 times that amount on occasion. And Kazakhstan is also adding about 4 or 5 tons a month each and every month for 77 months in a row. All the other stories here about central banks are buying gold. They know what is coming. All that nonsense, those are one-off purchases. Poland, Hungary, all the countries that you hear about, they all... Now, it's I wouldn't say significant, but it is noteworthy that central banks have purchased gold for the first time, the largest amount since 1967, but it is only 600 plus tons, and nearly 300 of it is Russian. So they're buying much smaller amounts. It is significant. I'm surprised they don't buy more, but they all have agreements amongst themselves not to buy gold or how much gold they can buy or sell. There's gold pool arrangements. I've covered them in a couple. You can go back and watch them. I think they're called the gold agreements. I don't remember the title of the things I did, but I went through each of the agreements. Most of the countries are signatories to these. They agree what they're going to buy or not buy, or what they're going to sell or not sell. So Russia adding another 1 million ounces of gold in February, and it's part and parcel of their building up their overall reserves. Let me show you the reserves here. Their reserves are up 30% since just January 2016. This is quite remarkable because actually Russia is relatively a prudent central bank. They have about $400 billion worth of external debt, about 450. They actually have reserves that cover that. That's unheard of. Most of these countries, United States, China, they have debt multiples higher than their reserves. They have debt multiples of their GDP. But Russia actually has more reserves than its overall debt. It has 90 billion of its 482 billion reserves in gold, about 19%. So it's got 482 billion worth of reserves, up 20. I mean, they've really built up the reserve position, and a good portion of that is currency reserves, and a good portion of that is dollars, notwithstanding the fact that they've sold off pretty much all of their U.S. treasuries. That was another thing. Russia's dumping treasuries and going to crush the dollar. No, the ruble's the one that's been crushed, and I guess people aren't understanding. Here I am telling you that Russia is running an extremely prudent central bank. It's got a decent gold reserve position, 5th largest in the world. It's increasing its reserves. It has little debt. And yet the ruble is not a good currency. Now, part and parcel of that is that they're on sanctions. But still, it does highlight that the way it is kind of screwed up. It is counterintuitive. This should be, you would think, if you're a hard money person who believes that a central bank should be prudent, shouldn't have a lot of debt, should have a decent gold reserve, should try to increase the reserves for a rainy day, you would think that would strengthen the currency. It doesn't. Kazakhstan, which is under no sanctions, has nearly 50% of their reserves in gold, and yet the Kazakhstan tenge or tenge, whatever it's called, it loses value on a daily basis. It's not a very strong currency. And which countries have stronger? A lot of people think Chinese yuan is strong because of their gold position. No, it's not. It's actually strong because, it should be weak because the amount of debt they have compared to the amount of gold, it dwarfs the amount of gold they have. The amount of gold they have is irrelevant. Even at 20,000 tons, it's still irrelevant. They have 50, 60, 70 trillion in debt. And a lot of that, a good portion of it is just bad debt, non-performing debt that they just extend, revalue, change it into equity, issue more debt. The Chinese yuan is a relatively strong currency, not because it has gold, just because it's a large economy. And unfortunately, the way you become a large economy is you issue debt. It buys you GDP. That's what China does. That's what the United States did. That's what QE is. That is what European Union is doing. They're bringing forward by borrowing money GDP. When China builds all those ghost cities that people say are an asset, no, they're not. They're a liability. They generate no revenue, and they cost money to have there. There's maintenance costs. That's not a good thing. That's a good thing that China does that. That's a good thing. No, it's not a good thing, Bernie, because they're stuck with them, and they didn't need them when they built them, and they may never need them. Even if they do need them 3 or 4 years from now, they could have built them 3 or 4 years from now. I still think that's a good thing. No. All right. Let's see what else happened with Russia. Got some more charts. Now, I mentioned that Russia is a big gold mining country, and it makes sense when you don't have a currency that does very well, and you're on sanctions from the United States, and you're kicked out of the SWIFT system. Well, you got a gold mine in your backyard. Hop to it, Vladimir, and start mining it and sending it to your central bank. And you can see here, they have been doing that. They're retaining increasing percentages of their domestic mining production and slapping it right into their central bank. Last year, 314 tons mined, 271 tons put into the central bank. 86% of their gold production straight to the central bank 2 years in a row. 2017, 260 tons of gold mined, 224 of them went into the central bank. The rest of it, they have arrangements to sell some to China. They're doing some Chinese joint ventures with China to mine the gold in Russia. And they also came up with an agreement late last year to also sell some gold to India. India is trying to revive the little bit of gold mining that they have, but they rely almost exclusively on gold imports and whatever gold happens to be in the country secondhand to trade. So this is an important chart here. It's going to be on the Small Gold website tomorrow. You can check it out. And was Russia always a big buyer of gold? No, it's not in their DNA. It's not like Russians are smart. They like gold. All these myths that people make up about. Anyway, here you go. You could see here. Maybe you can't. You'll have to listen to me. A lot of people just get the podcast or they're on their iPhone. They're just listening in the car. They don't see this. What this chart shows, and again, that's why I tell you to go to the Small Gold website when you're home. You can go on your computer. You can see on a big screen. I have all the charts there. This one shows from 1994 to 2018 the Russian additions and subtractions to gold reserves. So Russia sold a lot of gold 2003 and 4. They sold 48 tons in 97, 44 tons in 1999, 30 tons in 2000, 35 tons in 2002. I'm sorry, they didn't sell anything in 2003, 4, 5. They were just basically not buying or selling pretty much anything. Wasn't really since like 2009 that they started adding gold. They added 176 tons in 2009. Then they did 93, 75, and 78 the following years. Then in 2014, they really stepped it up to 171 tons. 2015, 208 tons. 2016, 199 tons. 2017, 224 tons. And then 2018, 271 tons. So far this year, first 2 months, they've added about 37 tons. They had a very weak start to January. There was 200,000 ounces, which is about 6 tons. But then this month or last month in February, they added 1 million ounces or about 31 tons. So they're about 37 tons so far this year. I'm guessing they'll probably do well over 250 tons again this year. And I think that's all we got on Russia. Yep. So let's see what the Small Gold mug stackers and game changers are saying. And let's see what we got. We'll be here. Remember, Saturday night is Saturday Night Silver with Small Gold. We're going to do some history, some Latin American silver mining, some Chinese silver purchase, silver confiscation, Pittman Act. Very wide-ranging silver discussion on Saturday. What is today? Today is Wednesday. So we still got Thursday and Friday to get through. And don't forget your Small Gold mugs. Oh, the Small Gold t-shirts are on sale today. I think they're 40% off. So you can get yourself a Small Gold This Guy t-shirt. And I'll give you the link for that. The link is below, but I'll throw it in the chat box. Let me show you what the This Guy t-shirt looks like because it is a classic. There's a This Guy mug. No, I can't find it. I might just have to give you the link. Well, I know how to get it. If I give you the link, I can give myself the link, then I don't have to find the photograph, and then I can just pull up the photograph. All right, let's see what you guys are saying. What you guys are saying. All right. We got a crowd. Ann is here. Phil is here. Andrew is here. Who else is here? Don't like the way this walks. Mint Mark is here. The whole gang is here. Where's Pablo? I don't see Pablo. Coins AZ is here. Jack is here. They're all here. Who's this guy talking, says Coins AZ. Tossing Molotovs is here. Good to see him. Yep. Anti-bull. Coins AZ says, I'm thinking of going to the grocery store to buy some veggies. Should I pay with my silver bars? After all, isn't supposed to be money? Well, it's not a currency. It could be used as a currency, but it currently isn't. Here's one I did want to mention this. Rory the Daily Coin mentioned, and other people mentioned this, and I have seen this. they say that there's pictures of silver at the Russian central bank, and I don't deny that or have any reason to disbelieve that, and I wouldn't disbelieve if other countries had a little silver somewhere stored. But the key there, though, is they do not list it on their balance sheet, meaning remember, countries also store other strategic assets. For example, if a country has oil reserves, they don't put that on their balance sheet. So there's a bit of a, when people try to, but silver, it's not the same. Russia doesn't list silver on its balance sheet. I go through the financial statements to pick out this gold number and to pick out the value of their gold, to pick out their currencies or reserves. They don't list a line item of silver. That doesn't mean that that's what people do. Then they start, you can't disprove it. And then you get into crazy land where just like you can't prove that what's in the Steele dossier isn't true. When people want to believe something, that's the argument that they use. You can't prove that it's not true. So in their minds, everyone's buying silver. Like when you tell them that the U.S. Mint only sold 8 million Silver Eagles so far this year, they're lying. They don't want anyone to know how much. Okay. J.P. Morgan's got all this silver. And you say, show me where it says they have it. You can't prove they don't have it. I mean, this is really moronica. But this is the level that you get. Once people want to believe something and you have somebody who's willing to tell it to them, they're going to believe it. Well, he said it. Okay. And he even wrote an article on it. He wrote a lot of articles on it. And he wrote a lot of articles and a lot of people read it and a lot of people saw it and a lot of people on YouTube talked about it. So it's got to be true. Okay. What else do we have today? Other than silver being a byproduct, says Enjoy Silver. Can you explain why it's 80 times cheaper to produce than gold, despite the... Oh, this guy has got all this... All right. It's a good question. Let me read it carefully. Because Enjoy Silver has probably heard a steady diet of the silver pumper narrative. Other than silver being a byproduct. Okay. Well, first of all, that's like saying, just consider that it's not a byproduct. Well, if 70% of the silver is mined as a byproduct, you can't just say, other than that. That's the old, how is the play, Mrs. Lincoln? Other than that, I know. Can you explain why it's 80 times cheaper to produce than gold, despite the 10-to-1 ratio in the ground? Okay. Was production cost ratio lower back when gold was set at 16-to-1? This is actually a very good question. You have to break it down. All right, so the gold-silver ratio was set at 16-to-1. That's a good point. And it was based on a relative rarity argument. Now, back then, this is a very good question. Back then, gold and silver mining was, by today's standards, pretty rudimentary. You didn't do these geological surveys and drill. I mean, it was either you found, the way people found gold or silver, you could have been just some schmo stomping around in the woods and then you hit upon a vein. You didn't have to go very far. All that kind of silver and gold mining is done. You like the San Francisco Gold Rush, the Comstock Lode, all that stuff. Now they have to go through different types of mining, the ratio, the amount of earth they have to move to get it's totally different. So it's a good point. I don't know the actual economics, but it is true that, you know what it is? The company, here's what it is. When a company decides to mine for gold, they have to also consider the financials of it. Same with when somebody mines for silver. Clearly, they could mine more silver than they do. The reason they don't, and it is more plentiful than gold, is because it costs more to mine silver. So what they do is, to answer your question, Enjoy Silver, is they mine the silver that they can that's feasible at $14, $13, $12 an ounce. Same thing for gold. There's more gold. You could get more gold if you want to spend $10,000 an ounce. So they also try to mine, they work out their financials so they can mine the gold that's going to cost them $900, $1,000, $1,100 an ounce. It's not that if all you wanted to do was go and get gold or get silver, it's a price differential. No, if all I wanted to do, I could probably find gold and silver in my backyard. It might cost me $50,000 or more to even get an ounce. I might not get it. I might even get an ounce. I might be able to get a tenth of an ounce of silver in my backyard. But I'd have to run it through the mill. And so there is silver and gold in the world. It's just how you're going to get at it. So those prices that you see, the mining costs, are based on businesses that are mines that try to strive to get the gold and silver that they can get at a price lower than the price that the market price is, so they can sell it for a profit. Okay, so that's actually the reason. Now, once it comes to market, then the market does what it does with it. And if there's a greater demand for gold than there is for silver, then people will buy the gold at a higher price than they will for silver, and that would explain the higher gold-silver ratio. And the reason that gold is more valued and treasured is there is a history. Even in India, they love gold far more than they love silver. Chinese actually buy less investment silver than Americans. I think Americans buy a lot of investment silver because of the... it's only recently that they do. If you look at the American Silver Eagle numbers from 1986 to 2008, they're very low. It wasn't until the financial crisis that you had all these silver pumper channels come along, and they really did a good job of promoting silver as a secondary metal to gold. But the gold sales were strong in 1999, 1986 at the U.S. Mint. There's always been a fascination with gold. There's not the same fascination with silver. Gold jewelry, when people get engaged, they buy a gold wedding band. They don't buy a silver wedding band. Central banks, as we mentioned, they're storing gold. So that adds to the demand profile of gold versus silver. So it's not just about how much it costs. It is how much it costs to get out of the ground, which is a function of what the price of silver or gold is in the market. So if silver was $100 an ounce, for whatever reason, went to $100 an ounce, you would have companies mining gold at $60, $70 an ounce. Stuff they wouldn't touch today. They know there's silver there, but it's not worth their time to go and get it. You'd also see a lot of recycling and so on. So a very good, very, very good question. Enjoy silver. All right. Enjoy silver. The price of silver is a conglomeration of factors, says CoinAZ, but it's based off of demand, which mostly its usefulness, not rarity or something else. Yes, but I think his question was more nuanced than that. His was, why does it cost more to mine gold than it does silver? And it does because that's the economic calculation they make to try to get the gold that they can. Now, obviously, if they can get gold for $16 an ounce, they would get it. But they've already gotten that gold. It's already been long since pulled off the topsoil in San Francisco or the area around San Francisco in the 1840s. But it is true. Relative rarity does not determine the value of something. I'm trying to come up with another example. I don't want to repeat myself, but platinum is far more rare than gold. The demand for platinum is less than gold, though. Platinum is 10 times rarer than gold, and the gold price is more expensive than platinum. All right, so Albert Sung is predicting a rate hike. That's interesting. We'll get into that another day. Tossing Molotov says, when everyone says crypto is dead, that's the time to buy. You could be right. Well, they went up just now. Litecoin above $60. Bitcoin at $4,034. Coins. Are the rumors true? This guy is planning to have a talk with that guy. I haven't heard from Bix, and I've really not that much. I mean, as I mentioned, you can't debate somebody who has a belief system and says how things should be. I mean, what can you say? Is you're wrong? They shouldn't be? I mean, I don't agree with the way you view the world. And the way you view the world is, in some respects, based on a projected fantasy. It's not based on the way things are, so you really can't debate that. All right, let's see. Tossing Molotov says, we need to have this guy versus that guy. I what's interesting about, I probably could, if I wanted to watch Bixweir videos, I probably could figure out how to imitate him. But generally, when I do an imitation, I don't have to work at it. I either can hear it right away. Like Bernie Sanders, I never even heard that guy that much. Now I think I imitate myself imitating him. I haven't heard him very much at all. Had a trouble with the Irish one because I don't really do that one very much either. But, all right.
The 1% in this country's got all the wealth, and then the people are on the YouTube channels talking about the gold and the silver, and if supply meets demand, then price will be just the overproduction cost, allowing the producer... I don't know what I'm talking about. I'm reading one of the comments.
Okay. Enjoy Silver says, if supply meets demand, price will be just overproduction cost. Hold on. You're right. But that's assuming that the only gold and silver available in the market to meet the demand is that which comes out of the mines. So, gold mining only accounts for an additional 2 to 3% of overall gold supply every year. So that's why it's not like eggs or milk. So, if supply meets demand, price will be just over production cost. That would be the case for eggs and milk, because you don't store eggs and milk that long. But if you can have eggs and egg substitutes, then that might not be the case. So you see the difference here. Was gold only 16 times more expensive to mine when set way back then? That I don't know. I don't know. There was actually a lot of... another good question. We might even get into this on Saturday, but there were a lot of things that happened that created massive inequities between gold and silver. So, for example, silver actually took a spike in the 1850s and early 1860s versus gold. Why? All that gold was found. When all that gold was found in the 1849 gold rush, that made gold, and flooded back east, that made gold relatively cheaper. If you go back to the 1500s, when they found all that silver in the New World and shipped it back to Spain, it created inflation in Spain. Why? Increase in the money supply. There was silver pieces of 8 came back. And so it depended. And then you had the Comstock lode in the 1868 or something like that, 1870. Then silver became mega cheap because they found all that silver. That's why the silver Democrats wanted free silver. They wanted to be able to mine their silver, bring it to the U.S. Mint and say, make me $1. When there was only like 32 cents worth of silver in it. Why should they get made $1 for that? So, see, today everything right now is so scientific, and all the discoveries have pretty much been made. And any discovery that has been made is still going to cost. If they do discover something, it's still going to cost a lot of money to get at that gold or silver. That's why they're talking about meteors now. So it's a good question. I don't know the cost of mining back then, but assuming that back then there used to be silver mines. There's still some in Mexico. We're just right on the surface. They weren't that deep, and But now with all the easy pickings gone, they have to. The mining companies. That's why I say it's the hardest company probably to run. You have to figure out what you're going to explore, how much you're going to put towards it. Then you've got to calculate, if I do exploit this particular property in this mine based on the drill and what it looks like, I should be able to get the gold or the silver out at this price, and then all the secondary metals that come with it. It's very, very complicated. And then you have environmental stuff, you've got accounting stuff, you're in multi-jurisdictions. That's why it's hard to invest in a mining company, because it's not just because the definition of a miner is a liar standing in front of a hole. The guy standing in front of the hole, even if he's brilliant, he probably is not quite sure how it's all going to work out. Tossing Molotov, I stack silver, but I'm not. I stack silver, but I'm not a tinfoil hat stacker. I'm a realist. Well, welcome to the channel. That's me. All right. When gold-silver ratio was 1:16, that was an artificially set price. It wasn't based off mining costs, from what I understand. No, it wasn't. It was based on when this is what people, they brag about. They want a gold standard, or they want a silver standard. whenever the government sets a standard, it has to work. So for a bimetallic standard, they had to set the price at something. So originally it was set at 15 to 1 or 16 to 1. I remember it was one way or the other. It was 15 to 1, then it went to 16 to 1, or it was 16 to 1 and went to 15 to 1. You can't have, if you set it, then it's artificial. And then what happens is you had discoveries which screwed it up. And so people did arbitrage all the time. There's lots of stories about that. If you have think about this. There was the same amount of silver in the coins and the same amount of gold in the coins for 100 years, and yet the price didn't change. So a dime was always worth a dime. Didn't matter how much silver. There was always the same amount of silver in it, and it was always 10 cents, even though the price of silver changed during that period. Same with gold. It's very complicated. But the point is that standard, people point to it as if it's like some kind of fact, rule, period. It's not. It was artificially set. And it wasn't always 16 to 1. And it still isn't. And a real free market is what you have now. Even though you have the COMEX and you have the manipulation, it's still freer than when the Congress in 1934 set the price of silver at $35 an ounce and left it there till 1971, 74. And then the London Gold Pool tried to keep it at $35 an ounce in order to have the gold standard, in order to have the Bretton Woods US dollar backed by gold standard. That's not a free market at all. So when people say, we want to go back to when it used to be, when it used to be fixed. It was artificial. All right, guys. NJ Silver says, notice how gold and silver are down early today. Yes, but palladium was up. Yes, because palladium doesn't trade on the Fed. That's a good point. It's trading on the fact that there's a shortage, there's Russian issues, and so on. That's not a perfect example difference between real market and paper market, though. Banks are scared of okay, here we go. Yeah, they're petrified. Central banks are losing control. Yes, Coins makes the point. Isn't possible. There just happens to be currently higher relative demand for palladium than gold. Absolutely. All right, let's see. AOC, you guys are talking about. Wow, you got all the fruits on there. Okay, Fiona always talking about her former Soviet Union. Okay, in 1991, comrade, after collapse of Soviet Union, president of Russian Federation Central Bank Kerneshko came out with statement that 2,000 tons of Russian gold went missing. Only 120 tons left. Where it went remains mystery till today. All right, nice story there. The banks have been repeatedly caught with manipulations as enjoy silver, PM markets lower. It's tough to deny they're to blame. No, it's tough to even try to think that maybe what you hear 1,000 times isn't true. Plus, they're good at concealing their gains behind the news. That's right. You can't prove that they're not manipulating. All right, let's see. See, why don't you want to believe that? Why don't you want to believe? And here's the other thing. If you actually believe that they are manipulating gold and silver to your detriment, and you're convinced of it, then why would you ever buy it? On the hope that they might lose control? Doesn't make any sense. That's like saying, I know if I stand in the middle of the road, a car will run me over. Watch. Car runs you over. Then you say, see? And then you get up and you say, I bet if I stand there again, it'll run me over. And then you get run over again. And then you say, see? See what? What are you trying to prove? If you know something's going to happen, and you've convinced yourself, and you see all the evidence that there's manipulation, why would you ever in your right mind buy gold or silver? I don't happen to believe that it's that ironclad, because if there was a physical demand that was strong enough, then market participants would buy it because they had to have it. You couldn't manipulate it to the point where, like palladium, you cannot, okay, solar manufacturer. You can't just buy COMEX futures and say, okay, I got all the silver I need to put in my panels. No, you actually have to buy the physical silver. So you would have a shortage if they drove it to a price where people thought it was actually, quote, cheap and a bargain. People would buy it up. Well, they don't, because they think the price is fair value. Look at American Silver Eagle sales. They're not sold out at the U.S. Mint. They ran out of planchets. You can go on right now, SD Bullion, buy as many Silver Eagles as you want. At these great prices, buying opportunity. I'm not saying it's not a good price. I'm just saying if the manipulation was so outrageous, then people would buy it. All right, what else? Prashanti girl is here. I'm going to have to call it a day here now. Call it a night. Yep, that's what we're going to do. Unless I see a small gold in the comments, which I don't. All right, I don't see a small gold. And there it is. All right, guys. Well, thank you very much for sticking with me an hour and 15 minutes. And I do want to thank Enjoy Silver for joining us tonight with his good questions. And then we'll see you guys tomorrow night. Thank you very much. Oh, Louis Pion says, if the PBOC is not buying the Chinese gold that is mined in China, yeah, I did an article on this. Where does the gold go? It can go to People's Bank of China subsidiary banks, which are either wholly owned or partially owned. Look up the case of China's missing gold. I wrote an article back in 2015. Same article published in Zero Hedge. Explains where the gold went. It's called The Case of China's Missing Gold, Small Gold. You should see it. It gives all the answers there. All right. But thanks for that question, Louis. And good night, everyone.